Clinton Wilkins is in the house. Mortgage 101, your guide to home ownership. It's a special edition, live in studio, because it's Financial Literacy Month, and we've got some people on the line. Why don't we just take a phone call?
We love taking calls. We haven't taken a call live on the air for a long time.
All right, let's do it. Tim, hello.
Hi. I hope you two are doing well.
We're doing well.
Well, that's good. My question is, I'm currently living in one half of a duplex.
Mm-hmm.
I want to buy the other half when it comes up for sale, so I'm going to move into that side because I know I'll get a better interest rate rather than saying that's a rental property.
Correct, yep.
Am I able to future leverage, say, okay, when I go to the bank, say, okay, well, I'm buying this other place, but I expect to make, say, $2,000 a month on my place that I'm leaving. Can I add that to my income, or they won't let me do that?
Yeah, that's something totally doable, and we actually see this type of scenario all the time. So it would be the same as you living anywhere, Tim. You know, you currently have an owner-occupied property. That owner-occupied property would then become a rental property, and the new one would be owner-occupied. Definitely reasonable. We see these scenarios happen literally all the time. What would happen on the existing property, depending on which lender is doing the financing for your new purchase, you would either need to get a lease agreement on the existing, or some lenders will allow you to get a market rent analysis, which typically the mortgage originator would do. So if you come to a mortgage broker, like we would order the market rent, and then the lender will use the market rent for your existing property to cover off those expenses. So certainly reasonable. And on the new property, because it's owner occupied, as long as the purchase price is under $1 million, you can certainly qualify for high ratio insurance. So 5% down on the first $500,000, and then 10% down anything over and above that. So totally doable.
Okay, perfect. Thank you. I was just wondering if I was able to do that type of thing. I already knew about moving, even though it's next door. It's a better interest rate. I already knew about that, but I wasn't sure if I could get it worked so that I could get a potential income based into it. But thank you a lot.
Yeah, we can definitely use the income, and that income would offset the expenses. So, yeah, great setup.
Thanks for the call, Tim.
Thanks.
Take care. 902-405-6000 if you want to ask Clinton Wilkins, our mortgage guru, a question, just like Tim did. Again, 902-405-6000 is the way to do it. George, hello.
Hey, good morning. How are you?
We're doing well.
That's great. Geez, I was calling your show on Saturday. I thought it was live when you were talking to Clinton.
We might not have been answering the phone, unfortunately.
Listen, I'd like to know, Clinton, like family members thinking about buying a mobile home, either a new one or one that's used. Mm-hmm. And it seems to be, like from my side of things, they seem to be like vehicles. They seem to depreciate, or the banks don't look at them favorably. Like, do you have any thoughts on that, on mobile homes? Like, should I or shouldn't I, or what's your take?
I'll give you my skinny. I've been doing this for 17 years, and we've done almost 5,000 transactions. In our office specifically, we don't offer financing on mobile homes. The reason being is not every lender will lend on them, and it can be challenging to arrange mortgage financing. There are a couple bank lenders, so big banks. There's a couple banks that will do it. And I would say the strongest people who finance mobile homes are credit unions. The reason being is when you have a mobile, if it's in a park, and even if it is on its own land, depending on what the setup is on its land, you may need what we call a CLIP, so a chattel loan insurance program product. And with this CLIP product, typically the mortgage has to be high ratio insured. So it needs to be insured by the Canadian Mortgage and Housing Corporation. And the challenge is that once you buy this mobile home, then that's typically the mortgage that you have. So you can't necessarily refinance or transfer the mortgage to another lender. I would say a few years ago, it was definitely a little bit easier to get financing on mobile homes, but I think now it certainly is more challenging.
Okay, thank you. I mean, like, those things are built to code and everything. That's my dilemma. I can't understand, like, what the problem is, but...
I think part of the challenge is the security. So I think in the old days, people would have mobiles in parks, and if they ran into some financial issues, they would then remove the mobile from the park, and the lender would never be able to find the property again. I think in today's day and age, things are more tied down, and there certainly are some options, but I think there is a little bit of a challenge.
I'm gonna let you go. So just so noisy. Go ahead.
I think it is more challenging to get financing on mobile homes For me, I think it's a great housing solution for many borrowers. Typically, mobile homes are a little bit less expensive than a freehold property are. But I can tell you, like Todd, mobiles have become very, very expensive. And in my opinion, I think it is more valuable to have a property that is on a freehold.
Right.
And I think they last longer. And I think there's probably more appreciation. So I think if you can afford it and you're kind of weighing one versus the other, I would definitely go with a freehold property.
Right. Okay, 902-405-6000 is the way to reach us if you'd like to chat with Clinton, get some great advice, mortgage-related advice, of course. He is the mortgage guru, after all. Richard, hello.
Hi, how's everybody doing?
We're doing well.
Good, that's good. Okay, 6 months or maybe 9 months ago, my secretary, she had bought a home, and it was $300,000 or $400,000. But the real estate was going crazy then, and I said to her, well, how much is your place worth? She said, I said, you should be able to get like a $200,000 extra out of it, like sell it. She bought it for $300,000, and she could sell it for $500,000.
Okay.
And I was saying to her, I said, well, you know, you should sell it and get that. And she said, no, well, she could have sold it for $250,000. And I told her, I said, you should sell it and get that money and put that money in the bank. And she didn't do it. Now, I think the whole bottom fell out of this thing where she could have done this and she should have done it. And I just want you to more or less tell me that I was right.
Well, I think that there may be a couple things in there that you touched on that could be accurate. I don't necessarily think the bottom fell out. So I'm not going to agree with you on that. I think that in Halifax and in Atlantic Canada, our demand is still more than the supply. Are things softer today than they were 6 months ago? Yes, they are. Primarily because of what's going on with the rates and really what's going on with inflation. It has had a big impact on what's going on with housing. The challenge is here, we're not building new homes fast enough. So I think there still is a very high demand. Are properties selling for as much over the listing price as they were? No. Are there as many offers coming in when there is a listing? No. Are things sitting longer on the market? Yes. But that means that the market is becoming more balanced and the average sale price is lower, but that doesn't necessarily mean that the value of the real estate is less. I think it's maybe a symptom of the higher priced properties are just not selling as quickly, or maybe even getting listed at all. So I think we're in a little bit of a blip. We've never had a boom here in Halifax. We typically have had growth of 1%, 2%, 3%. So us having double-digit growth has been unusual. So I think things are rebalancing a bit, but we're still seeing real estate transactions going on every day. And I think there's some good news to that as well. We're certainly seeing a lot of clients that are getting purchase agreements together, where there was a lot of, I think, fatigue in the market due to just how frustrating it was to transact, buy, and sell, really. Hopefully that answers your question.
Well, no, I was just wondering if she should have capitalized on getting $250,000 in her bank account, as opposed.
But she still needs a place to live, and I think that's the one thing that we need to focus on. And I don't think the prices are going down. Will things be as hot? And were we at the top of the market 6 months ago? We could be, but I don't think it went from making $250,000 now, and then that $250,000 profit is gone. I don't think that's the situation. Things are definitely softer, but things will sell for what the market value is, and the market value still is much more than it was 6 months, like a year ago, 2 years ago, 3 years ago.
Thanks, Richard. Gotta go.
Okay. Thank you.
All right, take care. 902-405-6000 or toll free at 877-801-8255. That's the way to reach us for Mortgage 101, your guide to homeownership, and we'll be back. Oh, yes, some April wine. Gotta love it. Mortgage 101, your guide to homeownership, a special edition live in studio Financial Literacy Month. Clinton Wilkins is along for the ride, and I think he's having. You love coming in here, don't you?
I know. I love coming in the studio.
You just love it.
You know what? I love talking to people live on the air. This is how we used to do our shows years gone by.
Yes.
Obviously, we know the last 3 years we've been doing it on the weekends, or 4 years maybe on the weekends.
Continue to do that.
That's still going to continue.
Yeah.
We actually have a show the last weekend of this month that wraps up Financial Literacy Month. And Financial Literacy Month, we really talk about income, assets, and credit. We talk a lot about credit, and we talk really about what's going on in the market and how can you keep Financial Literacy Month, going all year long. I think going into the holidays this year, Todd, I think people need to be more financially aware. We want to give a great holiday to our friends and our family. But I think with what's going on with inflation, we have to be more conservative this year. And, I think it's just a symptom of a more challenging year, and it's okay to tighten our belts a little bit.
Absolutely. Let's go back to the phones. Randy, hello.
Hey, hi, Todd. Hi, Clinton.
Hi there.
I'm at the point now with my current mortgage. I'm coming at the end of a 5-year locked-in term, and the bank's calling me. I'm about 5 months out now from it renewing, so I can negotiate it again. And I'm looking at, he's shopping it around, of course, because they've given me a rate that's gone up I'm about almost 2% higher than where I am now. And I'm trying to consider whether under these current conditions to lock in at a 3-year or a 5-year, go variable, or keep it in a locked-in deal with the way it is now. But I'm also considering, shopping it around with a broker and wondering, if that's, if they compete with the banks on a level that I can, save a bit on that interest.
I think that's a really great point. And we get asked these questions all the time. So when you're up for renewal, you're really a free agent. And if you're not looking to add any money to your mortgage, so i.e. get any equity out for, renovations or debt or any of the stuff. So if you're looking at just the mortgage amount, there is a transaction that you can do, which is called a transfer or an assignment. And in that type of transaction, typically you can really get the very best rate. And the new lender is going to pay the cost to transfer you over. So I would definitely talk to an unbiased mortgage professional. I can tell you the rates on a transfer, especially if we're at 65% of the market value or less, are typically as good of a rate as a customer buying a new home and putting down 5%. So typically you're getting the best rates in terms of this type of transaction. So I think it's definitely worthwhile. The one thing that you need to take into consideration is we need to keep your amortization in line with where you're at. Now, many customers right now that we're seeing that are coming up for renewal are in the exact same situation you are. And these are the ones that I'm really kind of concerned about coming into next year. So it's people that are in very low fixed rates that are now coming up. And in some cases, they're coming up and renewing into rates that are double the fixed rate that they're coming out of. So we're seeing some customers that don't necessarily want to do transfers because they don't want to keep their amortization in line. They are choosing to do a refinance, even if they're not pulling out any equity, to extend the amortization. So I think it's looking at the pros and the cons of both, but I definitely think it's worth a call and looking at the situation. Through our channel, we can secure a rate 120 days before that transfer occurs. So if you're 5 months out.
One of the other issues I do have currently is that my wife is working out of the country for the next 3 weeks, and so I keep getting called from this lovely lady at the bank. And she's, wanting me to commit or whatever. And of course, without her here in the country,
it's
I can't commit to anything without her, of course. So if I get a rate, is it guaranteed for a term that it's locked in and I can wait till she gets home? Here's our rate we got quoted, or is that too far out to get a guaranteed rate?
I think you're too far out right now. I think you need to wait about 30 days. You need to be within 120 days. And at that point, then you can get a rate secured. I'm certainly hearing rumblings that some of the fixed rates are softening. So my opinion, I am very pro-variable. Right now, variable and fixed are almost at the same in terms of pricing. If we look at the next 5 years, though, the variable will likely be cheaper. Many economists think that we're going to be in a recession type situation by the end of next year, which will then lower the rates. So I think if you were going to take a rate, I would stay away likely from a 5-year fixed, depending on what your financial risk tolerance is. If you really, really want a fixed rate, I would probably do a 3-year fixed, but I would definitely lean towards a 5-year variable. So those are the two things that I would kind of look at in your situation. But again, the risk tolerance really needs to be taken into consideration here and kind of looking at your entire financial situation.
Right. Okay. Sounds great.
Thanks, Randy.
Thanks, guys.
All right, take care. 902-405-6000. Mike, hello.
Hi, how's it going?
We're going well.
Right on. Mike, I had a couple questions. First of all, Clinton, about the caller that was calling about the mobile homes.
Mm-hmm.
I think he was probably referencing mini homes, correct? You think?
I think he was referencing mini homes, and obviously the situation is different if it is a prefab. If it's a prefab on a foundation, regular financing can be obviously obtained. A lot of customers that we have.
My home for 15 years, it's a mini home. And I went in recently.
You're breaking up on us
you're
a
really
little
hard
bit.
you're really hard to hear. Try and say that again, Mike. Your reception's good, not good.
I think he's gone.
I think we lost him. Okay, sorry we didn't get to that. Here's a couple email questions. Mike says I was wondering if you can have the mortgage guru, Clinton, talk about first-time home buyers and interest rates. Says, I'm ready to buy a house in the HRM for my family with a down payment saved up. So
I think first-time home buyers is really actually a good time. It is more challenging, obviously, for a client to, get approved right now, Todd. And I think that if you can get approved now, you can withhold really anything. A lot of the first-time home buyers that we're talking to now, I think, are a little bit frustrated just where the rates are. But we talk to them and say, if you can afford this payment now,
right,
when the rates do go down, keep your payment the same. Right. You'll have your mortgage paid off in half the time of the same cohort that really bought a year ago. The other thing is, what's really interesting with first-time home buyers is they're actually getting transactions together. It's not as competitive. So I certainly think it is a good time. And, the right time for a first-time home buyer is the right time for them. There's no ideal time to do a big financial transaction, but I think getting pre-approved is really the very first step. And then obviously you need to get geared up with a licensed real estate professional that is going to look after your best interests as well.
All right, this one, wondering what your thoughts are on reverse mortgages.
You know what? I think reverse mortgages are becoming more popular. I think in our market, there's not as many reverse mortgages happening as there are maybe in some other markets like Ontario and BC. I'll tell you the reason why. The way that reverse mortgages work, it's for seniors, and it is a calculation between the senior's age and the amount that can be financed on the property. So the way that reverse mortgages work is traditionally in the old school way, you would get a small mortgage maybe at like 25% of the property value, and then you wouldn't make any payments, no interest payments, no principal payments, and the balance just increases. So it basically gets capitalized every month, and then the senior can stay in that home and they can keep the mortgage in place until either they go to, assisted living or they were to pass away. And at that point, then the estate would sell the home, and then the balance of the equity would then go to the estate. It's not as popular as maybe traditional financing, but the real pro with a reverse mortgage is if there's been credit challenges in the past, or if that senior is on a very low income like CPP or OAS, they can still get this product. You don't need to make a principal and interest payment. So it certainly can be interesting. Typically, more of the seniors that I see, we're actually doing a lot of financing for seniors, Todd, believe it or not. Like we do financing for them, and sometimes they're giving gifts to family, and sometimes they're giving gifts so people can buy a home for down payment. The other time that we really do see seniors is sometimes even before people retire. They're putting a mortgage on their property, or maybe they're putting a home equity line of credit in place. Sometimes it's easier to qualify when you're still working, but we still do transactions for people on pensions all the time because sometimes they need to do modifications to the property. Sometimes they're living off that equity a little bit. And sometimes they're doing, making sure that, they're borrowing for investments or they're paying down some debt. So there's a lot of reasons why retirees do get a mortgage, but we do see quite a few.
Well, that half hour went quick.
I know. I feel like we could do another half an hour.
We definitely could, but unfortunately, we have other programming. But listen, how do people get a hold of you?
I think checking us out online is the best place to start, Todd. They can check us out at teamclinton.ca/radio. Lots of great information on our website.